Hello, everyone, and welcome back to another episode of WagMe TV. The boys are back this week, and we're coming to you live, coming off an absolutely insane weekend in the world of crypto. Right when we thought we had all the black swans exhausted in the world of crypto, this weekend threw us another. USDC, the most respected, the most put together, the most compliant stablecoin on the market, second largest stablecoin in the world, actually depegged this weekend, right off the back of some crazy banking situation going on with Silicon Valley Bank. So today we're coming to you, we're going to give you the step-by-step on how the USDC Depeg happened, what caused it, the timeline of everything that played out, and then we're going to move into what are the implications for the stablecoin market moving forward. So without further ado, take it away, Ev.
Yeah, it really was a huge weekend, and one where we saw USDC get down into the 80 cents range, which was just absolutely monumental. You know, it was something where we saw a ton of outflow coming from USDC into other stables like Tether, into Bitcoin, just other cryptocurrencies. But, you know, it really started on March 10th or 11th when we saw Silicon Valley Bank go down and a ton of outflows from Silicon Valley Bank. Unfortunately, what we also found out was that Circle, the issuer of USDC, had 3.3 billion tied up in Silicon Valley Bank. You know, this was problematic because we saw that USDC had a market cap of 40 billion. And so 3 of the 40 billion were locked up in Silicon Valley Bank where they couldn't be withdrawn. And all of a sudden we started to see USDC lose its peg. So that's where we saw USDC go from $1 all the way down to, at the very low, 88 cents. And so, you know, this was really because, you know, that $3 billion of the $40 billion in market cap was illiquid. It wouldn't be able to be used if people wanted to withdraw their funds. And so, you know, when you look at that market cap of 40 billion and you look at the 3 billion tied up, you could see how, you know, that's about 10% of the market cap. And we saw USDC lose about 10% worth of its value. So there was a very strong correlation between the money that was locked up or not unable to be taken out of Silicon Valley Bank and the drop in the price. And so this was right in this 90 cent, 91 cent mark that this news came out. And then we slowly saw USDC climb back to, on, what is this, the 13th? It finally got to that $1 mark. And this was where the U.S. Federal Reserve came in and said that all depositors within Silicon Valley Bank would be made whole and would be able to get their cash in the next week here. And so, you know, this was only a 4 or 5 day ride, but it was a wild ride, and one where not only did we see USDC lose its peg, but we also saw other stable coins in crypto lose its peg. And the real reason for this was that, you know, a lot of these stable coins are backed by one another. When you look at Frax, when you look at DAI, they've got USDC backing as well. And so on the right here, when you look at the last 7 days, the chart for the last 7 days, you can see similar dips in USDC, DAI, and Frax. And that's because of that close relationship that they have with each other. And so, yeah, it's been a wild ride for stables here, but, you know, really a lot of these have been super active over the last few days. And I'm sure you guys have some more thoughts on that as well.
Yeah, great job running through all of that. It's really interesting to look at the stable coins and how they're kind of correlated, particularly the ones that, you know, as you mentioned, DAI and Frax that have USDC as the backing. What's crazy to me that stands out is really just the sheer panic that we felt and that we saw in the market, right? When you actually do the math and you say, okay, they have $3.3 billion, quote unquote, locked up or missing or whatever out of like the 40 billion, that puts the implied value that if they lost all of that, even then they'd still be, they should be trading at about 92 cents. But as you saw, right, the pure panic in the market, there were plenty of people selling USDC for like under 90 cents, which I would hate for that to be me. I'm glad it's not. That's pure pain right there. But you kind of saw like that initial panic, and then, people started to kind of get their bearings straight. The fair value of, over the weekend when we didn't know what was happening was probably somewhere in like the 96 to 98 sort of range, depending on how much of that 3.3 billion that they would claw back. But really, really happy to see, the Fed kind of stepping in and making the depositors whole, and, really good for the depositors at Silicon Valley Bank, as well as, USDC holders in general.
Yeah, it's also on kind of that note of panic. It's pretty wild to see how quickly the space can move just in general, right? I mean, we saw ETH gas prices soar like crazy as investors were scrambling to move money around. I think it got upwards of somewhere in the 200s, Gwei did, versus like the roughly 20 to 40-ish range that we were seeing earlier on Friday before everything happened. And I think, to kind of add to the panic, I'm not sure how much it added to the panic or how much it prevented some of it, but prior to some of those disclosures, Binance and Coinbase, as major crypto exchanges, they took action on that, right? They temporarily suspended USDC conversions, while this whole thing was going down, right? So I think, to your point, all these are a little bit connected, right? It triggered other Depegs, like we talked about DAI or USDD, which is from Tron, or USDP for Paxos, right? All of them depegged to a certain extent. And then you look at something like Tether, USDT, it actually depegged to the upside, getting up to about, $1.06. So all of these things happened. Meanwhile, we're watching Bitcoin climb as kind of what we're seeing as like the banks within the US starting to show a little bit of fragility. So it was really interesting to see how quickly everything moved. And then in a matter of 4 days, right, USDC, which is our topic today, back to that dollar peg. So just really wild to see everything transpire.
Yeah, I think you guys have all made some amazing points. And like for me, I feel like what this really did was pull the veil off of like a stable coin being stable. Like I think that there's always been this kind of just like mantra in crypto, like, oh, well, it's a stable coin, like it's fine. It's like, well, it's only just like any other asset. It's only as good as what it's being backed by. And so if there isn't a 1-to-1, ratio between deposits and withdrawals between, what USDC has in actual US dollars versus what the coin is showing, then there's going to be an issue. Right. And so I think like it was a good, well-needed reality check too of like what stable coins are, how they can go up or down. They don't necessarily need to be at $1 if the fundamentals change with what they're being backed by.
I think it also kind of highlights, to your point, Sia, a little bit of the centralization with it, right? We're talking about Silicon Valley Bank, that's one bank, right, that they had $3.3 billion with. You see something like that go down, and all of a sudden there's panic, and all of a sudden it depegs, right? It just goes to show a little bit of that centralization within probably, honestly, not just stablecoins, but the crypto market as a whole. So I thought that was a really interesting insight as well.
Yeah, absolutely. And it kind of leads naturally into the question of, we've already seen Terra Luna bite the dust. So that really proved to us that the algorithmic side of the stablecoin market, yeah, prayers up. Who knows where Doquan is right now? But like the algorithmic kind of stable coin was kind of put to shame. Nobody really takes that seriously anymore, given what happened. That leaves kind of two different stable coin models, right? You have your fully collateralized stable coin model, like similar to a USDC or something, where the assets are in theory back to 1-to-1. Now, this obviously a lot of times relies on some centralized entity who custodies those funds, right? And we saw the issues with that play out over the weekend. You also have the over-collateralized model, which, DAI used to be, and now, a stablecoin such as LUSD that got a lot of notoriety over the weekend. Those are potential solutions, right? Where it's essentially LUSD is a stablecoin backed by Ethereum, where you can mint it in an over-collateralized fashion against some sort of LTV ratio, right? So it brings up the question, I'm curious to get your guys' opinion on, like, what does the market look like for stablecoins now that, your blue blood number 2 stablecoin in the world that everything is built on top of showed signs of, kinks in the armor, essentially, right? Like, does that leave opportunity for other stable coins to kind of progress? What do you guys think?
I think it definitely does. Like you're saying, it feels like there's a progression of the technology that's been used with stablecoins, going from algorithmic to asset backed to maybe the next wave is cryptocurrency backed in some way. And I think that's something that we've seen, because whenever we talk about these huge slip ups in centralized organizations within crypto, we always talk about how DeFi is still working fine, how DeFi is still living well. And so it feels like, we obviously need the on and off ramps that come with crypto, but it almost seems like these stable coins need to be more DeFi backed, need to be, less focused on or less backed by centralized players in the space and more on protocols. I think we talked about there's obviously smart contract risk there as well, but it feels like this evolution has shown us that there has to be a better path forward, because just in the last year, we've seen one huge failure of an algorithmic stablecoin, but one huge scare as well by arguably the safest in the space. So obviously there kind of needs to be change, in my opinion.
I think it's kind of, you bring up a great point, Evan, right? It's not all doom and gloom, right? You have to have some of these things happen in order for the space to learn and for new technologies to come out and people that really think about how things need to change in order for it to be successful in the end, right? I think that's all, really great things that can come out of it. But I think, as always, right, everyone's just kind of worried about like what this risk looks like. What does that next piece look like? We talked about reserve currency last week and creating your own stable coin and backing that with tons of different tokenized assets, right? How does that look in the future, right? Is that some sort of option for us here moving forward where things aren't pegged to a certain, fiat currency or something like that, where you can kind of spread that out and make sure you're mitigating some of that risk? I don't know. I think there's a couple different ways to be taking this. It's just really interesting in the moment to see, the reaction that has come to this. And you have to consider, like, obviously the Fed stepped in, started to talk through a lot of this, right? If they were to not do that and say, all the depositors were screwed that were with SVB, like, how does that now impact USDC and Circle, right? So it's interesting to think like a big government, something like that, can step in to essentially save USDC, potentially save pieces of this bank, right? Which is kind of the opposite of what the cryptocurrency mantra and market is really all about, right? So it is interesting to think through those things. I think that doesn't mean there's no place in crypto or, the future for stable coins, but it is something to kind of continue to consider as these things start to get more popular. We don't want it to become traditional finance all over again, right? The idea is that it's going to be different and it's going to be decentralized and everything like that. So just a couple pieces there.
Yeah, I think that's a lot of good points. And like, I feel like to both you, Mata, and then Evan's points, like, I think the other thing this is going to open it up for is any new stablecoin coming on the market is going to be heavily marketing what is backing it, right? Whether it's fully collateralized or not, whether it's a basket of assets that they're backed against. I think this opens up the door again for like what Mata was saying with reserve, where if you could have it be more unique than the actual asset that it's tied to. So instead of dollar to dollar, maybe it's dollar to basket of assets that averages X amount of growth over 5 years or something. And so I think what you're going to see is a lot more scrutiny, hopefully, from the market of saying, okay, well, let's see your balance sheet. Let's see what the deposit withdrawal ratio looks like. Let's see what you actually have collateralized with what you're saying you can, have in terms of withdrawals, right? And so hopefully it comes with more scrutiny. Hopefully people are a little bit more careful. I think, oddly enough, I think the USDC situation, the way that Evan explained it, where we could match up, percentage of market cap with percentage that Circle had outstanding with SVB, I think it's somewhat in a weird way bullish, where it's like the stablecoin's doing what it's supposed to be doing. Like its actual financial backing went down with a bank in kind of a black swan event, and there goes the financial backing of the stablecoin. So was actually working the way it was supposed to. It's just that we had kind of this black swan event. And so hopefully people are a little bit more, careful in terms of doing their research on stablecoins.
Was that a subtweet at Tether, Sia?
Maybe.
I'm wondering if it's best just to not tell anybody what you're backed by. I think we saw Tether. Yeah, they're going crazy.
Ignorance is bliss. Ignorance is bliss.
Yeah.
For all the degens out there.
I forget. It was over the weekend when everyone was panicking, but the CTO, I think, of Tether came out and was like, "We have no exposure to Silicon Valley Bank," and I'm like, dude, they wouldn't accept you as a client. Like, there's no way they would, even if you wanted to bank with them. But that's besides the point. A lot of unbelievable points. I think what I'm really hearing is like a lot of the themes in what you guys are talking about really have to do with like, how do we change the mindset of like what a stable currency is actually defined as, right? Like, how do we take it away from being this thing that's maybe tied to fiat, and how do we adjust people's minds to understand that a stable currency can actually be exactly that, stable in its purchasing power over time, not necessarily stable tied to a specific fiat currency. And that's, it's going to take a lot of time, and it might take some of these events happening again also to kind of help people kind of shift that mindset, right? The Bitcoin maxis have had this mindset for ages, right? As long as they've existed, where they're just like, one Bitcoin is one Bitcoin always, right? Like, it's very hard to get the general population to adjust their mindset to be like thinking in a new currency almost. But that's exactly what we're all here to try and do, right? In the world of crypto, and that's what I love about everything that you guys pointed out. Yeah, I mean, I think really, really awesome stuff here, guys. And, to the listeners, if you found any of this useful, helpful in any way, make sure to like, comment, subscribe down below. We'd love to hear your thoughts on the stablecoin market and what you think it'll look like moving forward. But that's all from us this week. So thanks so much for dialing in, and we'll see you next week. Wag me.